Good afternoon, everyone. I wanted to do this video as a follow-up to a video I did previously called Using 131-day cycles to find the top and bottom, specifically for Bitcoin. I wanted to return to this because the price action on Bitcoin over the last especially few days, but ever since this pattern started around February into March, April, and now into May, has occurred. There's been a lot of speculation about what's going on. Is this Bitcoin's peak? A lot of people are going back to the drawing board trying to figure out when the cycle is going to end. One of the things, if you're in CTM especially, one of the things that you have been following is a September 21st, 2021 peak. And even myself, I kind of gave up my original research. I did some research back in, I want to say, where were we on this chart? We were somewhere in the late September, early October range when I started actually doing research, because I had not yet been fully invested into Bitcoin. I had a piece, a very, very small piece, because I was uncertain, and I wanted to hold judgment until I did some research. So I did some research around this period of time, and because I was so new, just giving you some background here, it's not really necessary. Because I was so new to the space, I kind of threw away my old analysis. I mean, I kept the lines, and then I've eventually put them in these object trees over here. Because of what's been going on with Bitcoin, I'm wanting to revisit my old analysis, and I'm wanting to share a little bit of that old analysis to figure out, so I could show you how I figured out where I think potential tops could be. I'm not saying these will be the tops. I'm just saying it's possible that these could be where the tops are, and what the price targets could be based on the research that I've done. So to start out with, I have the halvings, which are the, obviously the kickstarters of the cycle. And I want to show you, zooming in, I'm on a log chart just so y'all know. But what I did was I went to every near-term high, and I don't mean near-term like if you go to a smaller time frame, there are obviously smaller highs and lows that happen across time. But I used the 3-day chart as to make my base case about where the near-term highs are. So I used the first spike high after the first halving. I used another high in May 2013. I used another high in 29 August 2013. I used the top, which was in December-ish of 2013. And then even on the way down, I used near-term highs. So I believe I used one in January of 2014, June 2014, and so on. I did it on the way down. And then once the second halving took place, the other caveat to this is I started from the halving date when I did all of this math too. I went again to the near-term highs, which were in the 2017 bull run, starting in January, and then again in March, and then again in June, and then again in September, and then again in November, and then again in December, and then on the way down as well. And my rule is, when I did this, because I didn't want to get too much, I didn't want to get too deep into something that was going to be impossible to calculate. So in my original research, there could not be another near-term high within at least 30 days. That was my rule. So, the reason why I'm able to take this high, say, in January 2017, and then this one in March and the reason why I don't take any of the other ones is because they're within 30 days. Like these spots in the middle here are within 30 days of the first, or of the January or of the March ones. So that was also my rule. That's another reason why, if you go to a different time frame, you'll see that like you have this spike high and then this spike high. But because those happened within 30 days of each other, my rule was I had to pick the higher one. So I picked the one that was in June, not the one that was in May. And so I did that. And then I basically took a step back and I added them all together. and I averaged them out. I came up to what was the average length of days, and the days were 131. That's why on this video I talked about 131 day cycles. Okay, and what I did was I started at the halving. Okay, so here this was in November 2012, and then July 2016, and then again in May of 2020. And what I did was, and I'm pulling back so that you guys can see what's going to happen to my screen, and I created verticals, right? And I'm going to turn all of these verticals on. I should have done this a little bit differently, organized it a little differently. But you see I've got a bunch of mess up here now, so I think I'm going to turn some of these text boxes off for now so that they don't get in the way of the analysis. Okay, so as you can see, there's some conclusions that you can come to once you use these verticals, and I'll explain what the other different colored verticals are on this side in just a second. So basically all of these have been spaced. I took the time to space out every 131 days, starting with the halving, okay, and marked 131 days, put a vertical. And then from that vertical, I marked another 131 days and put another vertical. And what I realized, what was really interesting is if you look and see where these verticals are lining up, I even at one time had boxes. You can kind of see these little boxes that have appeared. I don't know if you can actually see those really closely. If I zoom in a little, you can see that. I put boxes that spread 30 days out on each side. And what was really interesting was I discovered that at least during the bull phase, you could count on with almost certainly that that at least some of the spike highs and the cycle tops will happen. Let me put the boxes back up within 30 days of the vertical, right? So what's really crazy, okay, if I go to the my little halvings and tops, look at where cycle 1 peaked within 30 days of my box here, or of my vertical. Okay, what's really crazy too is, remember, cycle 1 had 2 spike highs and then with a long consolidation in between. Look at where the first spike high was. First spike high was within 3 days, or within I should say just within a few days of, I think it's 6 technically, 5 or 6 days of this top here. And when I'm saying top, I'm saying the highest price got in that area, right? And then if you look here, it was within 30 days. I think it was 26 days total of the third vertical. So we have 1, 2, 3 verticals by the time we got to the high. And though what was really interesting is sometimes even on the way down, there was a spike high near like a regional high near the vertical. So even on the way down here, look at this vertical within 30 days of this, this high right near this vertical. Not really here. This high near this vertical. This high near this vertical. This high near this vertical. And it kind of goes on. This high near this vertical. And then right shortly after, how many verticals is this? I forgot to count that. 1, 2, 3, 4, 5, 6, 7, 8, 9. After the 10th vertical was just immediately after that was the next halving event. And the halvings are, they're already built into Bitcoin's structure. So that's really interesting, right? So then let's go into the second halving cycle. I did the same thing, and look at what happened to, in the case of this peak. The peak is literally exactly on the high. Isn't that crazy? The peak hit the 4th vertical. Now I want you to notice something. It took about 3 verticals to get to the high, right? The 4th vertical was where the high was in the second cycle. And I thought that was interesting. So and then I guess if we just zoom in a little, in many cases, not in every case, but in many cases, one of the regional highs that I came up with is within 30 days of those tops, or of those boxes, or of those verticals. Okay, so if I take a step back, I want to show you again some conclusions that I came to. Here, I was looking and I said, okay, well, the spike high, or the cycle peak, I should say, There's no way it could have happened at the second vertical. And the reason why is because the first vertical had such, the price velocity moving to the upside was so high because we had the spikes. It needed one vertical of a break, we'll call it a break, before it could resume up. And this cycle unfolded really quickly from the halving to the peak in terms of the number of days. The difference in the second cycle was it was far more gradual. And I thought that was interesting. So you could have said that, okay, maybe because it was more gradual, it could have had, if it was going to follow the first cycle, then it would have had a spike at the second vertical, and then at the fourth vertical, it would have its second spike. But it was so gradual that it actually took 4 verticals for it to reach the all-time high. We didn't have anything we didn't have any long consolidation like we had in the first cycle, in the second cycle. Okay, and then again, on the backside of that, a lot of these highs, a lot of these spikes and increases in price are within 30 days of these verticals. So like even on the backside during the bear market, look right there, oops, right there, right there, even this one, and this one, and this one. So it's really interesting to see how that lines up. So then I started doing that in this halving cycle, and it misses, and obviously we had a little bit of a difference in this cycle because of the sell-off, because of the liquidity crisis in March 2020. But starting with the halving, you're close. We're really close, right? So we had a high here in mid-August of 2020, almost within that 30-day range of the vertical. We definitely had a first spike and then a second spike at the second vertical, which was in January, right? So it doesn't look like, I have these boxes, lit up. I don't know if you could tell. I have the box right here. It doesn't look like we're going to get a spike high near this box. We don't necessarily have to, because it really just depends on what's going on with if we're matching something more to the first cycle or to the second cycle. A lot of people, honestly, I've been thinking about this. If you take out this parabolic rise in the first cycle, we kind of have almost a rounding of price action very similar to what we are seeing in the cycle right now. Now, I've already come out and said, for my base case, that I don't think we're doing that. I think we're doing something more like the second cycle still, because we didn't see a blow off top. I think that's the thing I can't get past. What we should have done, and I'm going to actually turn off, see if I can turn them off. I'll turn off my boxes. What I feel like we should have seen, if we were going to match the first cycle, we should have seen a huge blow off top kind of event, and then kind of come down like that, and then we would round and then go up, or maybe even sooner than that. Okay, I feel like that's what should have happened. So because we didn't see that type of price action, I'm not convinced that that's the cycle we're following. So price action over the next week or so will tell us as far as like which cycle we're more mirroring. So anything is possible. But when I was looking at that, a couple of things stood out to me just overall. It took 3 verticals to get to the peak of the first cycle. It took 4 verticals to go to the peak of the second cycle. So originally in my research, I thought it was gonna take us to the 5th peak to get to the 5th vertical to get to the cycle peak. So then if I go back to, where are we here? If I turn these things back on, I'm just going to turn all of my text boxes on so you guys can see them. Okay, so here we go again, just to kind of give you a little bit of a recap. So first spike high 2 days from the first vertical, cycle 1 top 26 days from the third vertical. The cycle low even was 8 days before the 6th vertical, right? So that's how I'm going to try to figure out where the low is going to be in this next cycle too. Okay, cycle 2 top was directly on the 4th vertical. The cycle low was 27 days before the 7th vertical. So again, taking all of that into consideration, both the low and the high were one vertical later. So what I've suspected, what I've wondered about as we look at this current cycle, what I've wondered about is, are we going to, if we, I mean, I don't think it's possible that we match the first cycle because we didn't see a blow off top. I know there's a lot of business about the Wyckoff model and stuff like that. So, and if that did, we're just out of range, I believe, of our 30 days. Yeah, it's way over 30 days. Actually, it's almost 60 days between this vertical and this high right here, the high that we reached. This would have been the vertical that we would have to have gotten to if we were matching the first cycle. If we were going to match the second cycle, it's the fourth vertical, right? But the fourth vertical is not until October. Okay, so when people were talking about, September 21st, it's only going to go to the 19th here. But look at that, right? September 19th, that's before the fourth vertical. Now, there are people who are saying, hey, look, because of our price action, it looks like we are, we're between, like, averaging out the first and the second cycle. So if that's the case, if we are averaging the first and the second cycle, and I wish that I had the halving, I'll look up the halving tracker really quick. Halving tracker. If we look up the halving tracker, it sure looks like, if we look right here, our price action is currently in between the cycles. So from that standpoint, it's entirely possible we could still, if we go off of my research, it's entirely possible we could still come up and have the high in mid to late September. But if we were going to go by the verticals situation, considering the fact that both the peaks and the lows were one vertical later in the second cycle than in the first cycle, then that leads me more likely to believe that it's possible, I'm not saying it's going to happen, it's possible that this cycle could take until about February 26th, 2022 to reach the peak, because that would be the fifth vertical. Is it possible? I think, anything is possible at this point. I just don't know. Honestly, nobody knows, but that's entirely possible. So, if we're following the verticals theory, then it could, then our peak could have been somewhere close to June 9th, could have been close to October 16th, or could have been close to February 26, 2022. I will say this, the September 21st, 2021 peak is within 30 days of this October 16th date. So it's entirely possible that could happen too. So that's something to consider. All right. So that's kind of what I came up with originally. And then depending on what happens, my assumption would be that it's going to be, my original assumption was that we could be at the 8th vertical when we reach the low, or we could be at the 7th or the 6th. So that would mean that the potential low could be, around July 2022 or November 2022. So that July would be the 6th vertical. That would be like matching the first cycle. The 7th vertical is at November 15th-ish, 2022. That would be if we were matching the second cycle. Or if we extend it one more beyond, then it would be March 2023 before we would see the low. So those are some guesstimates, okay? Again, no guarantees. So I wanted to show you that. Let me turn my verticals off now. And now I'm going to go to my other Bitcoin chart, which I use to kind of mess around here. This one is a major mess, okay? I found a chart that goes all the way back to basically till when Bitcoin was publicly traded or was available on exchange. And this is to show you what my original price targeting was. I was targeting multiple things. I was targeting when the halving event was going to be. I was targeting when the peak was going to be, and I was targeting when the low was going to be. And this is on log scale once again, and you can take this for what it's worth. What I did was I stuck a bunch of horizontal and vertical lines marking the peaks, the halvings, the lows, etc. And then I drew lines connecting them. So I drew a line, for example, a trend line connecting the peak from the 2013 peak after the first halving to the peak after the second halving in December 2017. And what that did was that took me over here. Let me turn the auto off for a second so I could show you. Okay, and what that did was that took me over here. Now what I did here was I took my verticals concept and I marked the vertical in June, the vertical in October, and the vertical in February 2022. And in doing so, I thought, okay, if this trend line were to hold, then my target is going to be, or the earliest or the high could be anywhere between 200, what is this, 200, if it crosses exactly at that spot, it could have been around $215,000, or if it hit the October vertical, then it would have been around $270,000, or if it got all the way to the February vertical, then it would have been around $350,000. And then what I did was I extended this box as kind of like a range of where the high could be, up to and below by a certain percentage, like up above or below by a certain percentage. So my low is around 140,000 and my high is somewhere around 570,000. And again, that's just because of the percentage by which I averaged out the difference between these different zones. And then I adjusted the potential range based on those percentages. Okay, so if I were to put a vertical in here around our September date, then what it could be, what that looks like is that could be around $260,000. Okay, again, nobody knows, but that's just my original, that was my original research. And then I did the same thing with the low. You see here I connected the low from 2015 and the low from 2018. And I put it in this green area. Gotta go out of here again. I put it in this green area. And based on the different verticals, I think I actually only did, let's see, this is 4th, 5th, 6th, 7th, and 8th. So I only did the 7th and 8th. So if I wanted to include the 6th vertical, then it could be, the low could be around 53,000, which is really interesting considering, look at where we are here. It's really interesting, actually, now that I'm revisiting it. Look at where we've been settling, you know, on this chart. And then where that vertical crosses here, again, this is the 6th vertical, around $55,000. Very interesting. I don't know if it's going to end up there, but it could. And then I also have, if it touches the 7th vertical, then the low would be around 73,000. And if it touches the 8th vertical, then the low could be around 100,000, which is, I can't even fathom that amount, actually, to be honest with you. In order for it to be up here, Bitcoin's price would have to be like at 1 million or higher. Higher than 1 million, actually, I think, or almost 1 million. And then I did the same thing with percentage adjustment for this box as well. So our low could be, you know, and actually I have to adjust this to account for the 6th vertical. So maybe the low could be somewhere around 45,000 or as high as 134,000. I highly doubt that it's going to be up here. But, you know, it's just, I'm just trying to be consistent. And then I guesstimated that the halving was going to happen somewhere between September of 2023 and January of 2024. Doesn't mean it's going to be. I don't even know if that's actually the right amount of time between. If we see here. Let's see, it's a 4-year cycle. Oh yeah, so that could be. I don't think so. I think it's a little short of 4 years, but it could be. So anyway, very interesting, right, to see how that price action is working out. I'm actually going to have to go revisit this because that's very interesting that the potential low, if this line crosses, if the low is around this cross, it's going to be trading around the same range that we were stuck in for a long period of time. Because again, in the halving tracker, you kind of see that there's like a range. Like if you look in the second cycle, there's like this range that it couldn't get above for a bit. Then it was, that was the support line. And then if you look over here, that's where the low was. And kind of the same thing. This first kind of like spike high that we came off of, maybe this area, kind of became the low as well. Very interesting. So anyway, that's I wanted to show you all that. That was my original analysis. I'm going to try to revisit this a little bit and see what I can come up with, because nobody really knows what's going to happen anymore with Bitcoin because of this price action. My base case is that we're still following more closely to the second cycle, but take this research for whatever it's worth. I'm going to be revisiting it. I'm always going to be trying to learn and grow. So hopefully that's interesting to you. If you thought this video was interesting, go ahead and hit that like button, subscribe, share the video, and I'll see you guys next time.